Are you trading options but struggling to make money? In fact, you're just losing money over and over and over. If so, I understand. I blew up my account twice trying to trade, and now I'm able to make $3,000, $5,000 every single month because I quit doing these 5 things. So let's dive in and talk about these 5 things so that you can stop doing them too, so that you start making money. Number 1, I learned to read the chart and I stopped being specific and I started to look at the trend. What in the world does this mean? Well, if you can see here this chart, how many people look at charts like this where you don't know what's going on? You can hardly even see the stock price. You're like, okay, this indicator says this one says this. I have lines here for support and resistance. These lines track the daily, these track whatever. Oh my gosh, there's so much going on here. You can't read the chart. Delete everything, get rid of it all. This is not the chart that's going to help you make money. Trust me, I got distracted by this looking for a proven indicator that would make me money, but the truth is there is no one indicator and you can't crowd your charts. You need to simplify your charts and focus on the trend. And let me show you how my charts now look. This is how my chart currently looks. It's super simple. It has one thing on there that tells me where the lower range of the stock is, where it's traded down too low and it's expected to bounce, and where the stock is traded too high and it's expected to pull back. It hits this region, it pulls back. It hits here, it's likely to bounce. Now that I know those 2 things, the only thing I have to do from there is understand the current trend and make money from it. And how do I do that? Well, if the highs are getting higher and the lows are getting higher, that's an uptrend, and I take advantage of it that way. If the lows are getting lower and the highs are also getting lower, that's a downtrend. I make money to the downside. Super simple. Focus on the trend. Where is the trend going? Do not overcomplicate your charts, and that is number 1. Number 2 is buying cheap options, buying around the 0.45 delta range. So if you're buying naked options to capitalize on price movement, so for instance, if you think the market's going to drop, you buy a put. If you think the market's going to go up, you buy a call. I see a lot of people, for instance, let's say how I use my criteria here, where the market looks like it's going to start turning over. It's hitting its highest point, so a pullback is coming. People would buy a really cheap put option on SPY and make money on the way down. That is not what you want to do. You want to buy around the 0.45 delta, which means buy an option that is very close to being in the money, but it's still out of the money. Why? Well, because when it transfers between those 2 levels, when it's out of the money and then it goes into the money, that means it's gaining intrinsic value. It just naturally has more value because the option can be executed. And that switch is going to increase the amount of money your option makes faster than it would from an out of the money. So although it's cheaper to buy an out of the money option, buy closer in so that it transfers into the money, and now you have real value with your options contract. Another way I view this is, what is my target price? Where do I think the stock will trade to? So if I think the stock will trade down to 448, then I'm going to buy the 448 strike put. And so it's going to make money. It's going to hit that level. It's now going to become in the money, and then I can sell it and have that profit at the intrinsic value. So anyway, stop buying cheap options and buy ones that target the level you think you'll be taking profit at. And number 3 is high win rates do not mean most profitable. I know a lot of traders who are trading things like strangles, straddles, selling cash secured puts, credit spreads, and things like that that naturally have a really high win rate. And they think, yay, high win rate. If I can have a 95, 99% win rate, I'm going to make money. The only problem is the higher your win rate, the greater your losses are. So if you have a 95% win rate trade, you're going out like 5 delta in a position, you're going to lose a lot of money when you do lose. So sometimes it's okay to have a 75 to 80% win rate if you're collecting a lot more money. Why? Because if you collect more money, that means your loss is a lot less, which means you survive for a longer amount of time. So sometimes increasing your amount that you collect while decreasing your win rate is more profitable long term. That's why I stopped trading 90 to 95% win rate trades and went down to 75 to 80% win rate trades, because I collect more money, so I make more when I win and I lose less when I lose, so that although I'm losing more frequently, my winners far outpace that. Number 5, relying on indicators for buy and sell signals. This points into what we talked about during the first point. As a lot of times I was looking, okay, if I buy here and I sell here and I'm exact on all these things, guys, stop looking for the perfect indicator. It doesn't matter. What you want to look for is the trend, and do not obsess over where you enter a trade. You're never going to be able to enter it perfectly. I always held back from trading, didn't get in at the right time, so put it off too long because I was waiting for the perfect entry. There is no perfect entry. There's only great risk management. So again, like I got into a put credit spread around here, which makes money to the upside, and I didn't know it was going to take off like this. It could have pulled back a bit, and then decided to run. Either way, I would have been in the trade. My whole goal is to enter in trades and to manage risk correctly. If you do not manage risk correctly, that's how you lose money. So again, finding ideally where's the trend going, hoping to get the best entry that you can, but not waiting for a perfect one, and then managing the risk tightly and well. That is your job, not to obsess over entries, but to obsess over managing risk. If you manage risk correctly, almost no matter how you enter the trade, you'll still be able to do well. And last but not least, number 5, not paying attention to options volume. Guys, when you're trading options, what's very important to know is that there's a ton of different strike prices. For instance, each level on a stock has a strike price. Over in the SPY, 445 would have one, 452, 450, 447. All these different strikes have different amount of options volume. You can see this on the options chain. Here's a great example. You can see here how all these strike prices have a really high volume, and then they even have high open interest. That is what you're looking for. You're looking for a high amount of open interest, which says the number of contracts that are currently held, and then volume shows the number of contracts that were traded that single day. And so when you have a high level of volume, and especially open interest, you know you'll be able to get in and out of those trades easily. If you're trading something with low volume, you're going to be stuck in a trade. So if it's losing, you're going to be stuck with an even bigger loser, and you don't want to do that. Here's an example of FDX, which has very little volume. You can see here 60 contracts traded, 3, 12, 28, 20, something like that, very, very low. So if I wanted to trade 5 contracts, it would be very hard for me to get in, and more importantly, very hard for me to get out with a good level. Right now, if you want to learn how to start trading options the way that I do, using the exact strategy step by step, the way that I do, I have a free course link down below that will walk you through how I trade credit spreads, how I trade strangles, how I trade all these different types of strategies, and I'll walk you through step by step how you can place the trades today. So if you want that free course, it just requires your email, and that's it, and you'll learn how to trade exactly like I do. All right, guys, see you in the next video.